Hello everyone, welcome to a new video of Crypto Tutorship. Technical analysis, sometimes known as charting, is a sort of study that attempts to forecast future market behavior based on past price and volume data. In today's videos, we will discuss what is technical analysis. Candlesticks? Today's video will be amazing. Watch the entire video. So without any further ado, let's get into the video. The technical analysis technique is widely used in traditional financial markets for stocks and other assets, but it is also an essential component of trading digital currencies in the cryptocurrency market. In contrast to fundamental analysis, which evaluates many aspects surrounding an asset's price, technical analysis is only focused on previous price activity. As a result, it is used as a tool to evaluate an asset's price movements and volume data, and many traders use it to spot trends and profitable trading opportunities. The primitive technique of technical analysis was based on handmade sheets and manual calculations in the early stages. But with the advancement of technology and contemporary computing, TA grew popular and is now a vital tool for many investors and traders. Why is it important for traders to study Bitcoin charts? Reading Bitcoin charts is critical for traders looking for the greatest chances in the market, as technical analysis may assist investors in identifying market trends and forecasting future price movements of an asset. Technical analysis is the study of statistical trends over time to determine how supply and demand for a certain asset impact future price movements. Reading cryptocurrency market charts can help investors make well-informed selections depending on when positive and negative moves are expected to finish. The concept of technical analysis. The premise behind technical analysis is that these patterns and signals indicate human behavior as it manifests itself on the price chart. Investors and traders are human, and while there are many bots or algorithmic traders out there who employ automated chart signals, even those focus on historical patterns which still form the backbone of technical analysis. Humans have a tendency to get excessively emotional, particularly when it comes to fear and greed. Fear and greed, and to a lesser extent, supply and demand, influence price behavior in financial markets. Greed drives demand, while fear drives supply into the market. These human behavioral tendencies, on the other hand, are predictable. 3 fundamental assumptions underlying technical analysis. 3 assumptions underpin technical analysis, which we shall discuss briefly. Number 1, the market undervalues itself. According to this premise, everything in the market that might impact the price of cryptocurrency is represented in its price. The price reveals all you need to know about a cryptocurrency asset. You don't have to study the basic elements that impact a crypto asset to calculate its price fluctuations. 2, price movements within a trend. Price activity, regardless of period, always reveals tendencies, even in random market moves. The green and red candlesticks depict the price trend pattern and direction. Number 3, history repetition. Because the crypto market is repetitious, examining prior patterns might help you forecast future market moves. Market players' reactions to market events are typically constant over time. Even if some chart patterns originated a long time ago, they're still regarded as significant since they may occur again. Technical analysis tools and indicators. Here are 3 basis tools and indicators of technical analysis. Number 3, candlesticks. A candlestick chart is a means of illustrating an asset's historical price movement over time. Each candlestick symbolizes a given period based on the time frame selected by the trader. How do candlestick patterns work in trading? The candlestick chart is by far the most comprehensive way to illustrate an asset's price. This sort of graphic was taken by cryptocurrency traders from stock and FX trading. Unlike the line chart, which just shows the close price, the candlestick chart, as explained above, gives a wealth of information about the past price. Candlesticks form sequentially one after the other and can help you see the overall trend as well as resistance and support lines even if you don't have any technical indicators. Besides this, they can shape particular patterns that operate as buy or sell signals. What are candlestick charts? Cryptocurrency market movements may be examined and evaluated in a variety of ways, with traders having access to a variety of charts. Because of the nature of candlesticks, cryptocurrency candlestick charts provide extra information. Crypto candlestick charts, like line and bar graphs, display time across the horizontal axis and private data on the vertical axis. The primary distinction is that candlesticks reveal whether the market's price movement was positive or negative at a specific time, as well as the magnitude of that movement. Different timescales may be chosen, or cryptocurrency market charts, with candlesticks indicating that time frame. For example, if a crypto trading chart is set to 4-hour time frame, Each candlestick represents 4 hours of trading activity. The trading period chosen is determined by the trader's style and approach. A candlestick consists mostly of a body and wicks. The body of each candlestick symbolizes its starting and closing venues, while the top wick shows how high a cryptocurrency's price got during that time frame, and the bottom wick represents how low it got. Similarly, candlesticks come in 2 colors, green and red. Green candles suggest the price went risen throughout the time under review, while red candles show that the price fell. The basic structure of candlesticks may provide users with a lot of information. Candlestick patterns may be used by technical analysts to identify probable trend reversals. For example, bullish and bearish candlestick patterns should be recognized by cryptocurrency traders. A lengthy wick at the top of candle's body, for example, might indicate that traders are taking gains and that a sell-off is imminent. A lengthy wick at the bottom, on the other hand, may indicate that traders are purchasing the asset whenever the price falls. Similarly, a candlestick with virtually all of the area occupied by the body and extremely short wicks may indicate strong bullish sentiment if it's green or a strong negative feeling if it's red. A candlestick with practically no body and a lengthy wicks, on the other hand, indicates that neither buyers nor sellers are in control. Number 2. Levels of support and opposition. Reading live crypto and candlestick charts is simplified by identifying support and resistance levels with trend lines. A trend line is a line drawn on a chart that connects a sequence of prices. During a downturn, support levels are price marks at which cryptocurrencies or any other assets are likely to halt owing to a concentration of purchasing demand at that level. Price levels at which there is intense selling interest are referred to the resistance levels. Trend lines may be used to indicate support and resistance levels, making it simpler to spot crypto chart patterns. The lowest and second lowest lows of a cryptocurrency in a certain time frame are used to build an uptrend line. Support is considered to be levels that touch this trend line. A downtrend line is formed using the cryptocurrency's highest and second highest highs, and levels touching this line are considered resistance. Downtrend lines, as the name implies, are utilized during downtrends, whereas uptrend lines are used during uptrends. Various tactics can be applied depending on trend lines and support and resistance levels. Some technical analysts, for example, simply purchase around the support of uptrend lines and sell near the resistance of downtrend lines. A cryptocurrency's price may frequently drift sideways in a rather steady range. Bitcoin fluctuated between 6,000 and 6,500 between September and November of 2018, before falling to 3,200 by December of 2018. Resistance levels are at the top of the range in this example, while support levels are at the bottom. A breakdown may occur if the cryptocurrency's price falls below the range with a significant price movement, or a breakout may occur if the price rises with a strong price movement. Long-term moving averages may also be used to define support and resistance levels. These are typically technical indicators that smooth price data by calculating a price average that is regularly updated. Trend line. A trend line is a line drawn through a chart to represent the direction of the trend. Trend lines are created on price charts to highlight the price trend in the context of trade. Traders use this information to decide whether to purchase or sell in the trend's direction. Trend lines can be used to a stock price, a currency pair, or a cryptocurrency. Trend lines are a well-known price movement indicator in technical analysis. What is the function of a trend line? A straight line linking a succession of swing highs or swing lows is a traditional approach to build a trend line. Through the swing lows, an uptrend line is drawn, and through that swing highs, a downtrend line is formed. In this manner, the trend line acts as support for an uptrend or resistance for a decline. What do trend lines indicate? The trend line is one of the most essential tools that technical analysts utilize. Technical analysts search for trends in price movement rather than historical business success or other factors. A trend line helps technical analysts evaluate the current direction in market prices. According to technical analysts, the trend is your friend, and detecting this trend is the first step in executing a profitable trade. An analyst needs to have at least 2 points on a price chart to draw a trend line. Some analysts prefer shorter time spans, such as 1 minute or 5 minutes. Trend line limitations. Trend lines. Like any charting techniques have limitations in that they must be readjusted when a new price data arrives. A trend line can continue for a long period, but the price action will ultimately vary sufficiently that it must be adjusted. Furthermore, traders frequently link disparate data pieces. Some traders, for example, will utilize the lowest lows, but others may just use the lowest closing prices for a given time. Finally, trend lines used on shorter timescales might be volume sensitive. As volume increases throughout the session, a trend line built on low value may be easily broken. What are the various types of trend lines? Trend lines come in a variety of shapes and sizes: linear, logarithmic, polynomial, power, exponential, and moving average are the most frequent. I hope you liked the video. Don't forget to like, share, and subscribe to our channel. Thanks for watching.